David Katz, CIO with Matrix Asset Advisors in Philly. Bill Spiropoulos, CEO of CoreStates Capital Advisors. Bill, you are the one who quipped buy and don't look back. And you were talking about Johnson & Johnson.
I'm sorry, Johnson & Johnson, there's a long list of stocks that you could buy and have the courage to hold them for 2-3 years and look back, and you'll have a return that you can't find anywhere else. And
what is a return you can't find anywhere else? I mean, people are understandably terrified right now putting their money in stocks. What's an amazing return for a company like J&J?
Well, I think over the next 36 months, J&J, when you include the dividend, will offer investors a 15% plus annualized return over the next 3 years. And I think there are lots of stocks in the consumer sector that will be able to do that. That's a little better than a 2% CD or a 1% 2-year or a 2% 10-year Treasury, fully taxable.
Yeah. Also, David, there's a lot of focus now, especially on the high-end corporates, but I don't think that's an area that of particular interest to you right now, is it?
I'm sorry, you're asking me that?
Yeah, David?
Okay. We like basically most risk classes right now. We think corporate bonds are going to do well. We think stocks which had a miserable 2008 are due for a very strong 2009. We think the economy is in a recession, but ultimately that recession ends and stocks are going to start going up well before the recession ends.
And it seems like everybody's agreeing on that September 09, 9 of 09, is going to just be this sort of magic groovy time when things are going to get going again. But until then, we all got to go to work and, make money, so to speak. So you're recommending players should be very speculative and buy at least 1 or 2 high beta stocks. I like that.
This is for your stock contest game. And remember, that's not real money. So if you're wrong, you don't lose anything. If you're right, there's only one winner. So in that basis, we're saying swing for the fences, and really on a 1-month basis, all bets are off. It's just basically getting lucky. But for investors, we think if you have a 12 to 18-month time frame, that now is a time to be staying with stocks at a minimum or adding to stocks. We think stocks, as bad as they did this year, are due for a good year next year. In fact, as bad as this year was, we think that's how good next year is going to be.
Bill, you just so we can clear it up, it was Bill who had laid out stupid cheap in terms of some of the stocks out there, like Citigroup was one of the ones that you're also swinging for the fences on, correct?
Well, there's no fences. They're all down. All you have to do is walk over and pick up these gold bars, for God's sake. Everybody's scared to death, and the bottom line is wake up, look. $100 bills don't have disclaimers like this should. Brains and testosterone not included. Buy something. I mean, whether it's energy, J&J, it doesn't matter.
All right, let me just get, since you're both optimistic and God knows we need that. What about this, though? A lot of people say, and they give very good arguments for this, especially when you look at housing and the broader slowdown, that we could see earnings in this country drop anywhere from 10 to 25% next year. And if that happens, they say you could see the S&P 500 drop another 25% next year. What makes both of you think that will not happen? I mean, are you disputing just the market part, or do you also disputing the earnings dropping part?
30 years of experience in markets, just looking at human nature. I'm not going to go home and close my business. I'm not going to sell my practice. I'm not going to hide under the bed. Eventually, the nasties wear off, and you say, all right, let's get down to it. Let's survive. Let's go buy somebody. Let's eliminate a competitor. That's Americana. And there are some people that just like to worry. Yes, the earnings are going to be bad. We know that. But what about Q2, Q3, Q4? It's not the end of the world. We've been here before.
This is some good, tough love that Bill is giving everybody. What do you say, David?
Win one, buy one for the Gipper.
We would agree with that. Earnings are going to be down sharply, but stocks are down 50%. They've already factored those bad earnings in. If you normalize earnings, stocks are in the lowest decile of valuations. Historically, that's been very good on a go-forward basis.
All right. Well, guys, thanks very much. We appreciate it. David Katz, Bill Spiropoulos.
Buy something.
Tough, direct
Have a great year.
That's an epitaph. That'll fit nice on a tombstone if you ever wanted to, I'm not wishing bad.